Good morning to all of you. In this particular presentation, I am going to release the one option strategy in Nifty. So, for the coming 10 days, what will be the best option strategy we will initiate in Nifty? So, here before going to the strategy, we will just have a look in the Nifty trend analysis as well as its open interest. So looking at the open interest, I am seeing that in the 10,200 put is having the highest accumulation. So which will act as a support, and followed with that you have a highest accumulation in 10,000 put. These two also act as a great support. And coming to the call side, you have a great resistance at 10,300 level, followed with you have 10,500 level, also 10,400. So all these levels are having more than 30 lakhs contract. So highest open interest is here. So based on this view, how we are going to form a option strategy. So we'll just see some put call ratio analysis also, that PCR, the put call ratio. So this is the number of put contracts and this is the number of call contracts at this particular time. So if I divide this number of put contract divided by the number of call contract, I am getting 1.128. So as I used to say, 0.85 below put call ratio, it will be a downtrend, and above 0.85 till 1.05, this is the range. You can say it is a consolidation band, and once it is crossing this 1.05 and going above 1.16 above, then the trend is up. So this is the things I have already told in many of my webinars. So based on this view, we will not be much exposed, same time we will be also making good profit. So with that particular view, we have to form a option strategy. So let us have a look on the 1SD trend analysis for the coming 10 days. So currently we are at 10,335.40. That range we are just oscillating. So this says that if we are crossing above 10,412, we have all probability to touch 10,650 in the first cycle, and in second cycle till 10,800, third cycle till 10,962. Same way, if it is falling below 10,265, you have all probability to touch 10,000 range, and second cycle is 9,800 range also. So this is what it says currently. So volatility may decay, volatility may go up. So this also will impact little bit of pricing. So looking at this level, I am seeing a termination of second cycle at 10,800. I am seeing a termination of the second cycle of the downtrend as 9,882. So based on this view, I am just going to form an option strategy. So currently I am at 10,340 level, 340 level. So I am just recommending to buy the 10,350 call option and put option, each one lot. So current prices are 38 and 130, 138 and 132. Each one lot we are buying for the April month. So for the month of April, we are buying this, and this particular strategy is known as your short call ratio spread and short put ratio spread. So, and you can, otherwise you can say it as the short call ratio spread in the cross calendar, short put ratio spread in the cross calendar. So we are going to sell 10,900 call option. So based on that view, little bit I have just here the termination starts second cycle at 9,900. I am just going little 100 point below. There are also 10,800. I am just going one step above. So for the month of May, I am going to sell 10,900 call option, two lots at 35 currently, and 9,800 put option of May I am also selling at two lots, currently trading at 72. So 72, and it has a great amount of liquidity also, 73 now it has come. So you can say if you form this strategy, you are getting a credit of 70 points here, 140 points here, and here 138 and 132 is the debit you are paying. So net basis, so two lots you are selling, so 35 into 2, 70, 70 into 2, 140. So based on this, you are paying 60 rupees premium to the market. So net basis 4,500 premium you are paying to the market. Margin for this particular trade, 1,82,000 rupees will be required. And this, what is the payoff of this particular strategy? So this, since it has a cross calendar view, you are buying a call option and put option of current month, and you are selling the call option and put option of next month. It is little difficult to project the profitability. However, we can project it using our option strategy software. So that also I will demonstrate here. So if you are a user of our option strategy software, you have many tools available here. I am just going for user defined calendar strategy. So now we'll see based on these things. So I have just selected the Nifty index future 26 April loaded data. So in the first section I got the April month and May month. I'm just doing my combination I'm choosing. I have bought a put option of one lot. So, and I sold the put option of 9,800 May month, two lots. So based on that coming 10 days period, what is projected, my expectation is it should be coming to 9,900 range, or it should go to the 10,800 range. So this is my expectation, 10,800 range, or I'll be coming to the 9,900 below. So this is the thing I am getting as per my honest trend analysis. So if I'm just going for this, so I have sold 9,800 put option. If the maximum, if the Nifty fall and come down to 9,800 level, my profitability is at 10,631 in this particular combination, put combination alone, not the call combination. Call combination wins. So and profitability starts if the Nifty falling below 10,200. So once it comes to 10,100, 10,000 level also I have some profitability of 7,000 rupees. So this says that if it is going below, I have, this is the profitability. And if it is going up, I have a liability 1,100 at 10,434 level. Going above, if it is going to 10,600, 700, my liability is not increasing, only 200, 300 rupees difference it is coming. So this is 1,000 to 1,500 to 900, or 500 to 1,600 maximum liability. So 530 to 1,600 maximum liability. Profitability 1,700 to 10,600. So this is the range we are fixing for the coming 10 days period. So let me take the most optimistic way. You can say 5,700, 5,700 to 5,800 at 10,042 or 10,000 below. I can say that 7,000 rupees the liability, and I am taking 1,400 rupees as the 7,000 rupees as a profit, and 1,400 is the liability in case of the put combination. This is the for the put combination. Now going for the call combination. So call combination. So this liability and profitability little changes if the volatility also changes in the future. So if I'm going for a call combination, so this is the call combination 10,350. I have to take buying one lot. I'm selling the call options of 10,900. 10,900. So this I am selling two lots. Profitability, the pricing little changed. So this says that once we are going up, we have profit starting from 10,500. We are going on getting the profit. Once we are coming to 10,700 level, also we are getting the profit. Once we are near to 10,900, our profitability reduces. So 500, 600, this level we have some profit. So here you can say 4,000 profitability will come. Here to 1,200 rupees loss will be there. Some 3 to 3.5 you will be making. In case there is a fall at this particular level, you will be having 4,000 losses here, and that will be having 7,000 rupees profit here. So 3 to 4,000 rupees profit you will be making on the net basis. So if I can say, in case of any price move, if I can conclude, so call combination maximum you can say here, also having some 4 to 5,000 rupees profitability, along with a liability of say 3.5 to 4,000 liability. So you can say in this particular combination, irrespective of the market move, I again repeat, irrespective of the market move, for the coming 10 days period, irrespective of a move to 10,700 level, or irrespective of a move to 10,000 level, you are at a profitability of 3 to 3.5 thousand. 3 to 3,500 for coming 10 days period. Both the combination, one combination will be giving you a profit, other will be at a small loss. So by this process, the net is derived for the coming 10 days period. 3,500 to 4,000 profitability you can get in this particular strategy, having a risk of, you can say, almost zero loss you are deriving here, and it works out to some 2 to 2.5% you can earn on your margin, and there is no MTM requirement for this strategy. And why we have initiated this strategy? Because we have not got a uptrend confirmation so far, neither we have got a downtrend confirmation. So we are expecting a range may happen. So if it is the coming 10 days period that range happens, then also we will be getting on profitability 3,500 to 4,000 on an employed capital of 1,82,000. So this is a period of 10 days maximum you can do. And this profitability can increase also. This profitability can increase based on the IV. If the IV fallen down now, if the IV is going to fall in the coming 10 days period, then the profitability little increase also, somewhat more profitability. So initiate this particular strategy, experience it, and if you feedback it. So if you are a visitor of Smart Finance, you are getting all our strategy analysis here. The homepage itself, we have given many strategies, and to maintain a consistency, we have given for Bank Nifty, we have given 5 strategies. So you would have seen that that strategy, how it has translated 2 days during the hold, in between 3 to 4 days holidays was there. During the period of holding, maximum there is a flash crash happened, it has gone to 6,000 loss per hour. Yesterday it has again recovered and given you the profitability. And 22nd also we have given one strategy, though till end we have first 2-3 days it has maintained the profitability. Last day, so on the 10th day only 600 loss we have come out. So Bank Nifty, very wild move it is showing. Sometimes there is a great move in the upward, sometimes there is a very great downward move also. In this period of uncertainty also, when there is a huge up move happened and huge down move happened, to the tune of 1,000 point of oscillation happened. If you introspect all these strategies, they are well protected strategy, and they have, though they have not given you a great profit, however, they have protected your capital and given you small profit or a small loss. So this is the benefit of option strategy. So let us try something on the Nifty also. So I have started with the Nifty. 4, 5, 6 strategies also on the Nifty we can see. And the result season is coming, so we can also give some strategies on the counter like Infosys, TCS and all in future days. So look into that and just introspect and find out the benefit of option strategy. And if you are associated with the Smart Finance, you are getting many free stops here. You are getting the access to our free Android apps. So this will be, these apps is going to help you for intraday trend forecast, for trend identification, for option trading. So you can download and use it. There is no restrictions imposed here. So you can download, use it, and to share this thing with your friend also. So with your friends also you do share these things. So here also you will get the GAN square of 9, square of 12 tool, midpoint intraday analysis. So these are the manual tools wherein you have to punch the data and get the outcome. However, that efficiency of the same tool, same method is being improvised in our paid softwares. So wherein we just improvise the calculation of volatility, we improvise the data pulling so that there should not be any error in punching the data, correct data. So by this process, the paid tools has a enhanced success as compared to the free tools. However, free tools you can use, you can share with your friends. So these are the courses available. Futures and option course also is there, which talks about the option strategy. So you can also avail this course and get the benefit of that. And if you are getting this, viewing this video on the YouTube, try to subscribe the channel. So once you are subscribing the channel, you will be getting the video info as and when the video is getting uploaded. So that will help you a lot. That will help you a lot. So weekly trends we are giving, option strategies we are giving. So you will get a lot of help out of that. Subscribe this channel and do share this video also with your friends so that they should know some good method of trade. So it is not important that how much profit we are making. Rather, we need to first learn how we can protect your capital. Once you protect your capital, it is definitely going to grow. Though it will be a small growth, but it will be a definite growth. So follow this particular strategy and give your feedback. Thank you.